chart, and I'm just going to make a case. And it's not a case that I'm going to tell you why this is something that is absolutely the way the world's going to work. But what I am going to do is I'm going to make a case because it fascinates me. Now, you guys will be aware that we have Gordon Scott on the team now, and he's been talking about doomsday for US stock markets. And he makes the case, and I think it's a great case, that US institutions, if they own a product for more than 12 months, less than 12 months, they've got to pay capital gains tax. So therefore, quite often large pullbacks on markets come back after 12 months. But he doesn't say 12 months. Can someone help me out? He says 55 weeks, 56 weeks. It's not exactly 12 months. And I've been wondering why it's not exactly 12 months. I can see something in the comments box, or someone here will be telling me exactly what it is. 56 weeks. But that's fascinating. And the thing is that I really love the case. I really love his reason about tax. It makes complete sense to me. Then I hear 56 weeks instead of 52 weeks, and I think, well, that doesn't make a lot of sense to me, apart from maybe institutions don't buy at the bottom of stock markets. Maybe institutions buy small amounts at the bottom of stock markets, and there's something that they use to get in with more volume, and it's that point that it's 52 weeks after. Now, again, I'm not Gordon Scott, and I haven't done the hours of research or written a book on this, but what I did do was have a look at a couple of charts, and these charts made me really interested in this week here. So here is the bottom here. I just put this mark next to it so I could find it. Here's the bottom of the stock market in 2020. There it is there, right? 23rd of March. Now, what you'd expect people to do is to buy the first high low. That's right there, right? But I don't think institutions would buy that. And they wouldn't buy that because they've got a lower high. And this could easily, are we sharing my screen? I can see a bit more chat coming in. Don't think so, Alexis. We'll wait and see, eh? So I don't think institutions would buy here. I don't think they would because they've got a lower high. But if you get to here, they've got a higher high and a higher low. And I think institutions would buy there. Now, if I'm right, if that's the point where institutions brought volume to the market, then we will see a sell in that stock market this week. Now, I've read the thing from Alexis telling me that it's paperwork. That's the delay. I'll be interested to see. But the thing that I found really interesting was if this is what they look for, and, you know, first high, first high low following, that makes sense to me as a trader. I don't think institutions will buy here because that's a lower high, and that could easily come down here and just do that, or pop, pop, pop down. Whereas here, uptrend's established, that's an area where it looks to me like somebody got pretty interested in buying, right? And that was the 21st of April. So if they've held that for 12 months, they're getting to that 12-month period of sell about now. That was the NASDAQ, S&P. Let's go back and have a look at the S&P. There's the low there, same sort of date, 24th of March, 23rd of March. There's that first higher low where we'd love to buy, and probably retail traders did. But I doubt institutions did. Lower high. Here I get a higher high. Here I get a higher low. 22nd of April. So if they're waiting 12 months, if they got in here, and again, looks to me like someone bought. Now, don't get me wrong, someone bought in here as well. But I'm not sure there's institutions at volume buying in this area through here. So, you know, most institutions will have been at this thing 20 times. Where do they put the volume in? Well, if they put it in around here, they'll be looking to get rid of some of that next week. Now, what I did was I did a bit of a comparison. I thought, well, something sold this week. What sold this week, guys? Can anyone help me out? What sold this week? Can someone let me know in the chat? What's just sold? I can see a comment. I haven't read it yet, but I'm pretty sure it says cryptos, right? Crypto sold. So what I did was I had a look at a Bitcoin chart, and I scrolled back. And this is, you got to work really hard as a trader to come up with these scenarios. And I scrolled back, and what I got was, there's the low in the crypto market, and there's the first low, and it's off a lower high, and no one would have bought it. But there's a higher high, and there's a higher low. And that is the 16th of April. That's 1 week earlier than the S&P and the NASDAQ. And if that's the case, institutions may well have been coming in at this time and may well have been emptying out this last week. Interests me. I just was playing around with, I've been away for the weekend. I was looking at some charts before we got underway today, and I turned this up and I thought, interesting. Now, we have seen around the time of Gordon's talk, we've seen selling. You know, we've seen the Bitcoin thing. That is still a reasonably unstable looking market. But I wonder about these dates, and I wonder if the 2 week for paperwork is spot on the money, or whether it's really just. I mean, look, if you're going to try and convince me that institutions brought here, I'm not a buyer of that theory. I don't believe institutions bought here. Look, institutions aren't buying fib retracements. Institutions don't do that. Institutions are looking for something fundamental to drive them. And they may have taken small positions down here, just like they probably took small positions here and lost. But I got some small positions down here and built them. But I don't know that they would have been in seriously before this area here. Just a theory, just a thought, just a different view on the Gordon Scott stuff. And I'm going to have a quick chat with him about it. And Yellen announced taxes last week. Yeah, fair enough. We'll see how this week plays out. And look, again, I'm not saying to you that that I think that this case here is where they brought, and this week we're going to see US share markets, drop 6% and be auto closed. All I'm telling you is I found the dates a bit interesting. If you go back and have a look at this, because that's where I'd buy. I'd buy here, but this is where I'd really buy. I'd take a little position down. I'm a bit different to a lot of guys. I probably will take a little position down here with a little bit of risk. I might get hit out. I might make it, might not. But here I'd be a little bit more interested. But here's where I'm really interested. We talk a lot about the first higher low, but it's still dangerous off a lower high. So interested me. Again, not saying that the US stock market's coming crashing down tomorrow. What I am saying is that the timing makes me interested and probably unlikely to be buying those products yet. I'll let them shake out a little bit this week before I start to get back into my positions on them that I did close out at some nice highs recently. Rightio, that is me on that. Another view on it. I will drop it off to Gordon and have a bit of a chat about it at some stage. I might catch him tomorrow morning.